I want to bring on a man who knows crypto well here. And joining us right now is the founder and CEO of a blockchain-based lending platform, Celsius Network. Alex Mashinsky joins us right now. And Alex, appreciate you taking the time here to chat. I mean, obviously, none of this seems real, new when it comes to Bitcoin's code and the way that it's described in the white paper, but a lot of people are surprised that Elon Musk is pulling this 180 here. What do you make about maybe the environmental concerns that some say are overblown when it comes to Bitcoin?
Thanks for having me back. Tesla basically is trying to sell all of us an electric car. So obviously, he was on the other side of the trade here, picking Bitcoin as a payment method. I think if he picked Ethereum or some of the other proof of stake projects like Cardano, he would not have this PR nightmare.
Yeah, I mean, the transaction piece is one that's interesting when it stands out, because Bitcoin necessarily had shifted away from that, right? People had talked about it in the transaction space before. And then, everyone really leaned into the idea of it being digital gold. We saw institutional attraction there now too. But to your point on the sustainability impact side, what do you expect this is all about? Because some people are saying that you could see a solar-powered Bitcoin miner. You could see this shift as he's kind of flexing in here to a more sustainable piece. Which one do you see him going to if that is what he's trying to do here?
Well, in the last quarter, Tesla made something like $300 million in profit just from selling a portion of its Bitcoin position. So obviously, they use Bitcoin to deliver a very important quarter for them. So you can't have it both ways. You can't say, oh, Bitcoin's not good for me, and at the same time print a quarter using mostly Bitcoin earnings. So Bitcoin doesn't need Tesla. Bitcoin is up 20 million% in the last decade, the best performing asset class of the last decade by an order of magnitude. And the industry is going to do just fine without Elon.
Yeah, what's interesting too, and I mean, I want to talk about kind of what your platform does here as well, because Bitcoin's kind of been that on-ramp for a lot of people to get into crypto. But now that that's happened and we've seen this explosion in DeFi, your platform lets people take out loans against their cryptos. You can earn yield on cryptos there. But interesting to see as more people kind of move into that, if you can take out a loan getting cash, fiat dollars, but keep your stuff staked there, it seems like we're kind of moving rather quickly into this area away from ever having to interact with traditional banking at all. And obviously there's tax advantage that come with not selling crypto. So how overlooked do you think that benefit is? And how far off are we from kind of having this mass adoption where you're more interacting with financial instruments on the blockchain than you are in traditional banking?
Well, I put the shirt on to remind everybody that you need to, our purpose, Celsius Network helps you unbank yourself and help bank the unbanked. We pay 10% interest on assets like stable coins that are dollar denominated. And we manage just over $20 billion. We have over 700,000 users worldwide. And Celsius pays 100 times more than JP Morgan, right? 10% versus 0.1%. So you have to ask yourself, which one is the real market? Which yield represents the real value of money? What the bank pays you or what DeFi pays you? So we've seen over the last several years that basically deploying your money into free markets where the price or the value is determined by the bidder and the person who's willing to take that bid, right, is a much more efficient mechanism for earning yield than relying on the Fed or relying on the banks to tell you what they're willing to pay for your money.